Hello everybody, so this video is entitled 4 Gems When All is Expensive, because so many stocks are getting overheated. In my view, they are getting quite expensive, especially some of the AI names, right? I'm thinking about things like AMD and the like, a lot of the storage companies, Micron. I think the market is running quite too fast, and I like to buy stocks when they're cheap. I don't like to buy stocks when they've run so much in recent weeks, right? And so, also before I begin and tell you about the stocks, the market. Here's what happened. The market. I started this video. The market again, all-time high, everything great, and then you have small rumor on the Middle East, and then the market takes a huge drop just based on a rumor. Remember that in my view, we are still in a very tweet-driven market. You could have a tweet that sends everything down, and the stocks that have run up very much, they are more likely to be impacted than the stocks that are sitting there just being dirt cheap. So I want to talk about 4 gems. I have 3 stocks, and then I have 1 sector specifically that I want to talk about. So let's begin with the first stock that is just too cheap in my opinion. This one has not run, despite this one, in my view, being an AI stocks, and that stock is Zeta. You can see on my spreadsheet, EV over GP over RG is 0.14, which is universally cheap on my spreadsheet. Only a handful of stocks get this low valuation under 0.2 is pretty rare to find. This one achieves the rule of 40 at 57. They have long-term guidance towards 2028. The business is founder-led. The long-term guidance implies very high growth. And also, what is the business of Zeta? So I made a video covering what Zeta does. I'm sorry for this crude analogy, but it's the Palantir of marketing, is the way I describe it. Their system, their setup sits on top of all sorts of different marketing tools used by marketing departments, and then it helps you coordinate a campaign across all of these tools, and they've just introduced their own AI, Athena, and my guess is that at some point, major companies will have AI Athena join you on a Zoom call, and you'll have your AI Athena agent who's going to be the marketing chief. That's kind of the way I view this headed towards maybe 5 years, maybe 10 years from now. And I think they're a very compelling business, and clearly, the call is to be believed. I thought the call was really, really good, and I think a lot of companies are very pleased with Zeta and with that service. It's important to note the moat of this company. This company has been associated with software stocks, but the market, I think, has forgotten that they have a moat. They follow something like 245 million people in America longitudinally, which they follow, which they can target, which they can sell to, and they do all of this in a very compliant way, and that's part of the moat. It's a little bit like a network effect. It's a unique resource that they've grown and developed for years, but not all competitors necessarily have. And if you compare Zeta to, say, other platforms, oftentimes it's compared to the trade desk. The trade desk, for example, much more expensive on my spreadsheet, but the trade desk is also sitting under a Zeta. It's sitting one level below, and the trade desk are also services from Amazon that are competing against it. So anyways, I find this stock way too cheap. It had absolutely stellar Q1 earnings, growing sales in Q1 at 50%, and the market entirely ignored it, entirely dismissed, and that's why the stock has barely moved this past month, while the market is way up this past month. Another stock, and this stock prompted me to make that video 7 days ago, called "The Market Are Still Brutal, Just Like a Casino." And that stock, of course, is SoFi. I honestly did not understand the market's reaction. I cannot understand the market's reaction. SoFi is a machine. It keeps growing at a consistent pace. It keeps taking over. It's with its goal of being a top 10 financial institution. It keeps firing on all cylinders, and yet the stock still has not recovered and is nowhere near. SoFi is nowhere near where it was at the beginning of the year. Not too long ago, this was a $25 stock. It got almost halved in 6 months, and again, it's part of the course. I guess SoFi's only flaw is that it's not in AI. It's not in AI. But if you look at the actual growth numbers under the hood, everything is fine as far as I'm concerned. A lot of it has to do with rates. They had to slightly change their guidance because they now, I think they expect no rate cut or something like that, and they were expecting rate cuts. So again, the Fed chair, the new Fed chair upcoming, and the Fed as a whole keeping a lid on a lot of the financials. But as soon as the interest rates drop, in my view, SoFi will be one of the stocks to benefit. These stocks, of course, make money on lending. We often assume that the demand for lending, the demand for borrowing money is unlimited, and it's literally dependent on interest rates. And when interest rates drop, people are going to borrow more money, and it's going to float whole boats, including SoFi. And SoFi, by the way, is now the cheaper fintech, single home of finance. I often compare SoFi to Nubank in a different part of the world, of course, in Latin America. But for the longest time, SoFi and Nubank used to trade at the same valuation. It's not the case anymore. SoFi is now cheaper than Nubank by quite a bit, and I prefer new SoFi over Nubank right now. So I don't understand why this stock is so cheap, and it got taken down, of course, with the sector. I could talk about Robinhood also being highly disliked by the market. A third stock that I talk about all the time on this channel, and by the way, they entered Canada, was it 2 days ago? I'm very busy with my day job, but I need to cover that. They launched the HIMS version for Canada. HIMS is just too cheap, at $26. Again, this is a stock which most of last year was trading above $50. It's halved. Being halved for innovation is kind of part of the course in 2026. But to me, EV over GP over RG over 0.1 is way too cheap. The rule of 40 is achieved, and the business is a much better business right now than it was last year because they have a partnership with Lilly, because they now sell official tirzepatide, they sell official semaglutide. They've partnered with both Novo and Lilly, and for all of last year, we heard that the narrative was all about GLP-1, and the market was dismissing him, saying, you're just a GLP-1 company, and you are selling knockoffs. We are selling compounded drugs. We're calling them knockoffs, even though, of course, compounding has been established for a very long time in the field of pharmacy. Now, they sell the official drugs from both of the brands, the main brands. HIMS is the bigger platform. HIMS is almost half of the telehealth market in the USA, and the stock is trading at half what it was trading last year. I guess GLP-1 were all hyped up last year, and today they're hyping up AI, and of course HIMS is not associated with the AI trade, just like Zeta, although HIMS, in my view, definitely should, because as you know, on this channel, I've always described HIMS as an electronic AI doctor. So it's AI-enabled doctor. And of course, they have close to 2,000 doctors on their platform prescribing drugs. And of course, these prescriptions are informed by AI. They have MedMatch, which is their AI system, which allows matching drug to the patient. But of course, HIMS is also an so electronic distance, right? AI pharmacy. Why? Because they do customized drug. You can see, if you saw my video about their latest product, their low T pill, it's a customized pill with exactly the right amount of I can't remember the name of that drug, but they compound it exactly for your needs. So one person, one drug. This is the world we are moving towards. One person, one drug. One YouTube account, one YouTube feed with everything you're likely to like, right? One Amazon shopping account, one Amazon feed with everything you're unique to you. Pharmacy is going that way. Pills are going to be customized one-to-one. And this is what HIMS is doing. And HIMS is able to do this, of course, only because they don't take insurance. If HIMS took insurance, they wouldn't be able to move that fast. They wouldn't be able to have transparent pricing, which is one of the big reasons why I think this stock is a big deal. It's transparent pricing. You know exactly what you're going to pay before you use the service. They wouldn't be able to move so fast with instant service. You see a provider within 24 hours because it's in their own network. They have their own network of providers. You wouldn't be able to do customized drugs. And all of this for cheaper than copays. As the CEO has said multiple times, average American spends something like $2,500 a year in copays. HIMS is cheaper than that, right? For a entry-level health issue like ED, you're gonna be at like $55 or something like that. For something a little higher, like let's say you want an oral weight loss pill, you know, like a metformin-based one, I think they start at $79 or something like that. So inexpensive. Quite inexpensive. And they're going international. And they got the eucalyptus acquisition. That was a very, very good deal, that acquisition. They got a lot of seller financing for it. And remember also the convertible debt that they raised at the peak stock price of last year, about a year ago. They raised more than $1 billion in converts at a very, very low interest rate when the stock was all hyped up. So they have a good CFO. There's a lot to love about HIMS. Okay, again, and this is one of these stocks that I've covered since the early days of the channel. We've been covering this stock since this channel's only me. I've been covering this stock since about $5, right? And I thought I was late back then. Anyways, this stock to me has no business trading at $26. Lastly, and this is my fourth gem, and it's not a stock, it's a bonus. I'm going to call it a sector as a whole. I think the future of finance, I think blockchain, I think Bitcoin, and I think what Saylor calls the staking networks, like the Solanas of the world, I find them way too cheap. I think a lot of the capital is moving towards AI, entirely forgetting about the blockchain trade, which is a major innovation, of course, impacting fintech and eventually impacting even the future of the web. You know, fundamentally, these protocols are decentralized computers where you can run all sorts of stuff, and I fundamentally believe we'll have a decentralized YouTube someday. Maybe someday we'll have a decentralized shopping site, a decentralized X or a decentralized Twitter, right? That already exists, by the way, in the Bitcoin space with Nostr. But you can build a lot of decentralized applications can be built even beyond finance, right? Even chat, right? Solana chat. You can build all sorts of apps on top of these staking networks, which are essentially giant computers, and of course Solana is the fee. You pay your fees in Solana. Hyperliquid is a little different. Hyperliquid is competing against the New York Stock Exchange, but it has all sorts of assets. It's also very innovative with perpetual preferred, which is a crypto innovation. And again, I don't understand why this is so cheap. The fact that Strategy is down this much, I really absolutely don't understand. When on the call, Saylor literally said what the market wanted to hear, that he would potentially be willing to sell some Bitcoin if anything were to happen. He said that on the call. I thought that the call was stellar. The market is entirely ignoring that. And of course, Bitcoin is at 79K. Capital is flowing out of crypto, chasing the AI trade. I think that's one of the explanations. Of course, you never know with these movements under the hood, but I don't like to chase, right? I mean, I love Micron, and I understand Micron's thesis as much as anybody. But it's run way too much. It's going to mean revert. At least I think it's going to mean revert. It's run way too much. Like the only stock in AI that I don't think has run too much is Nvidia. Right, I like Tesla. I think Tesla is very, very cheap in AI, but Tesla, of course, the story is physical AI, and that story is a few years from now. The market only looks a few weeks ahead. I like Meta. I think Meta hasn't run too much, and Meta is investing heavily in AI. Meta is having a lot of success with its Meta glasses, but definitely not a fan of Microsoft. When Microsoft can be potentially have big parts of its software business be disrupted by vibe code and people vibe coding inside in the house solution, right? Google has run way too much, in my view. A lot of these companies are very much very, very hyped. I don't think that's the case for HIMS right now. I don't think it's the case for SoFi right now. I don't think it's the case for Zeta right now. And I don't think it's the case for a lot of the proxies of Bitcoin and Hyperliquid and Solana. And on this channel, I like PURR as a proxy, because Hyperliquid is not that easy to buy in the United States. There's a NASDAQ DAT that's trading at a 1.1 MNAV roughly that you can buy, where you get access to essentially pure exposure to the PURR token, but on TradFi rails. And of course, Forward Industries is my preferred Solana DAT. I think they're a bigger one, they're the best positioned, but there's other ones, right? You have DFDV, you have Upexi. I think it's a good way to get exposure, or you maybe want to get just an ETF, just a Sol ETF or pure Sol. Sol is easier to get access to. Ethereum quickly. You may know on the channel. Not a big fan of Ethereum. I think Ethereum is too slow. If I look at all of the exchange, if you look at Uniswap, for example, the ranking of Uniswap is not really good compared to what it used to be. Ethereum used to be the best. Now Ethereum, in my view, is very, very much lagging. And even the stable coins, right? You have a lot of stable coins who are being built on Solana, not necessarily built as much on Ethereum as they used to. So anyways, kind of the crypto sector as a whole, I find cheap right now. I find it more attractive than AI, and that's why I talk about it a lot, right? I tell you kind of what I like at any point in time, but everything that I like, of course, is not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.